Okay, so you've arranged a mortgage, you've got a closing coming up, be it for a new purchase or refinance or any other type of transaction, and you've made some mistakes along the way that are going to kill your mortgage closing, prevent the deal from closing, which in the case of a purchase could actually end up getting you sued. So we're going to focus today on three major mistakes people make that will get your mortgage deal killed immediately. First and foremost, this is a very common mistake, and that is people who spend their down payment and their closing costs. Part of the mortgage commitment, the lenders will ask you to have proof of down payment cash on hand for the closing transaction, and many lenders will ask you to show at least 1.5 to 4% of the purchase price in cash on hand funds to close the mortgage at the end of it. And one mistake people make is that they see that big fat number in their bank account and they go ahead and spend it. So when the time comes to close the mortgage, either the down payment's not there or the closing costs aren't there, hence the closing gets affected and often pushed back or canceled altogether. Hopefully that's not the case, but we have heard horror stories of people who have gone out and purchased boats, cars, vacations, and blown their money before the closing. So rule number one, no major purchases prior to closing. Second biggest mistake, people who rack up their credit cards. And I know when you're in a house transaction, you're excited about furniture and accessories and ways, visions that you've got for the home and whatnot. Wait until the purchase closes. Wait until you have the keys. Because if you end up putting a bunch of stuff on credit, sometimes what will happen is lenders pull a credit check just before the mortgage closes. And guess what? If your credit rating has been affected and all of a sudden it's too low and you've dropped out of the lending guidelines that the lender requires, or it has increased your debt ratios to the point where you no longer qualify for the mortgage, that's one quick way to get your mortgage killed. So do not rack up anything on your credit cards. In fact, you should keep your credit cards at the same balance as when you applied and try and pay it down if you can at all leading up to close. Third and final thing that is probably one of the most common mistakes people make is prior to a closing, change jobs or quit your job. Some people move jobs as a matter of necessity. Now, if you're moving within the field that you're in, not as much of a deal. But of course, if you're not, you're moving to a new job or a new type of job, you're going to be on probation. That may eliminate you from funding. And you want to make sure that you've got stable, steady income prior to funding. So if you do have a job change coming up, at least wait till you're done your closing so that the lender knows that when the time comes, you've at least got your employment that you promised them in the commitment is what you're going to be closing the mortgage upon. So those are three of the most common mistakes that you can make in a mortgage closing and three common mistakes that are sure to get your deal killed. Keep in mind, if you've missed any of our little update videos, they're all at my YouTube channel, Joel J.M. Scott. You can like and subscribe, and you can check the updates. We do the Mortgage and Money Morning Show Monday, Wednesday, and Friday mornings at 8 a.m.